Good morning. It is January the 4th, 2017. Time to kick off another trading day. As usual, we have our commentary disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as the lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So we've got that box checked off for this morning, ready to get after it. It is January the 4th, second trading day of the year. We had a pretty strong recovery yesterday into the close of the stock market. We blew through 252. It is higher this morning, overnight. Asia's markets were up, minus the Hang Seng, which was pretty close to unchanged. Europe's markets were up too. The news out of Europe overnight showed better than forecast service PMI numbers, higher than forecast inflation. So the economy looks like it's getting a little better in Europe. And you have inflation that discourages investment in fixed income, encourages investment in stocks. And then we have the meme being put out damn near every day in the United States that the Dow is going over 20,000, with 21,000 the next trading target if that happens. So the mood and feeling is still to the positive side in stocks. Basically because of Trump's proposed changes in industrial and tax policies. Okay, boil it all together for Treasuries. I think we have ourselves a trading range. The news today, motor vehicle sales, 17.7 million. Discounts are everywhere. There have been shutdowns in several plants. Ford and Chrysler, I haven't seen General Motors mentioned. ADP 172. Friday's non-farm payrolls, they're estimating at 175 right now. And FOMC minutes. So ADP is the market's news focus, followed by direction of ES. Treasuries and the E-mini are pushing resistance this morning, so we'll see which one can break out. First sell is 3 to 7. Second sell 11 to 15. On the buy side, 25 to 29. We're just going to play for a trading range, and then 17 to 21 for buy 2. Okay, looking at the bond. My favorite contract. Resistance. First level of resistance is 24 to 28. It's one, so 31 to 03, sell 1. 11 to 15, sell 2. On the support side, 8 to 12, number 1. So 1 to 5 is buy 1. Again, looking for a trading range market. 21 to 25 is buy 2. Looking at gold. Gold is up overnight, and they're saying inflation in Europe and Asia is causing gold to rally. Makes sense. Logical. Sell 68 to 70, then 74 to 76. On the buy side, London's low is 61.5, so buy 60.62 for buying 1. And 55 to 57 for buy 2. Okay, looking at the euro. Dollar is down overnight. We usually get dollar up for 2 days, off for a day, and I think that's what we're seeing right here. Don't think anything has really changed. So we've got resistance at 75, so 104.75, sell 1. 105 even, sell 2. And a limit sell against this spill right here, or against that high. That's our sell zone right there. On the buy side, London's last rotate down was 45, so 104.45 to 50 buy 1. And we'll leave it 104.25 where we were last night for buy 2. That worked out pretty well for those that traded it. Crude oil, big article out today. Don't know where they were yesterday, the people that wrote this article, about how it looks like OPEC members are going to stick with their quotas. So we came in wanting to sell 75s to the buck. That still looks reasonable right now. And 53.25, 53.50, sell 2. The APIs probably come out tonight. And the EIA and natural gas will be out tomorrow. This is a D leaning P. So stops below yesterday's low right here. So we'll put 51.75, 52 buy 1, 51.25, 51.50 buy 2. And I'll put a question mark at 52.25. I love it how the news jumps from one side of the boat to the other. Yesterday everything was nobody would be adhering to quotas. Today they will be adhering to quotas. So my guess is that it's still pretty rare for them to be bragging about breaking quotas in production, but some nations are doing that. Usually they don't say anything and they cheat like hell. Okay, right here, 60 is a very, very clean break in the market. We have rejected prices above 58. I think the market is going to trade higher. We've got ourselves a P here. But sell failure to take out basically 22.60 and hold that. Second sell will be 64.66. On the buy side, 50 to 52. And then 45.47. Sounds like yesterday morning, doesn't it? Like the long side better. Okay, the unemployment numbers have been coming a little bit better than forecast, so there's a chance we'll have a higher ADP number. If that is the case, it should help the stock market. The focus in the stock market is shifting from what's the Fed going to do next to fundamental economic analysis and inflation, both of which encourage the buying of stocks. Okay, it's going to take a while to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.